Well, we're bringing back a segment that the OGs know, which is called Get the Check, and we decide if a company would get our check. You might remember in our first episode, although we didn't call it Get the Check at the time, we were pretty bullish on Bilt.
Yeah.
And as usual, our prediction has come true. Ankur Jain, CEO of Bilt, announced that they raised a $250 million round at a $10.8 billion valuation, tripling their previous valuation. And I feel like passing the 10 billion threshold is like huge.
It's a huge. Yeah. We haven't seen a fintech raise at that kind of valuation or like triple their valuation in a while. Like Ramp has been doing well, but they didn't like 3x. I think
theirs is like 2 billion.
Yeah.
Like
we don't need to get into all of that, but yeah, they've gotten really big. They have $100 billion in housing spending nationwide, and 1 in 4 apartments in the country have signed, including our apartment, which signed between our first episode and this one. So
yeah, we use Bilt.
Yeah.
And all of Greystar uses Bilt, which is like huge because Greystar is literally like one of the biggest apartment.
Yeah. And they process over $100 billion in housing spend annually. And
I just said that.
Oh. I thought you said 1 billion in revenue.
No, she said 100 billion.
Oh, okay. Yeah. Well, I was going to say that is, that is 10% of the, did you also say this?
No.
Okay. I thought the cooler number is that I think it's 10% of
She's
the
like,
annual.
that's cool.
Yeah, I was like, cool. You just ignored me, repeated me, and then are like, the more important thing that Annika didn't say. No, but I feel like you're about to say a fun fact I haven't heard, so I'm excited.
So Americans spend nearly $1 trillion annually on residential rent. So they've penetrated the market at 10%, which I think is
good.
Huge.
Yeah.
It's huge. Yeah.
That is huge.
So Bilt, like we said, is a fintech company. It lets renters earn points on their rent. And the reason why this is so huge is rent is a huge category of spend in my life, maybe your life too. And historically, you were not able to get points. It didn't go into your credit score. And so Bilt really changed all of that.
You also couldn't pay with a credit card because you would have like an additional processing fee, which they took away.
Yeah.
Yeah. Well, that's why the rent category was never cracked, or big spend. General big spend categories are not cracked because they don't want to pay the 3% fee.
Yeah. And it was because like landlords didn't want to pay the 3% fee, but like Bilt basically found a way around it where like,
well, they didn't really find a way around it. They just didn't charge landlords the fee. And they charged Wells Fargo, which Wells Fargo backed out of.
Don't they convert the payment to ACH or something? Oh, but that's like for the landlord's sake.
Yeah.
Okay.
Yeah.
But the 3% fee got eaten by Wells Fargo.
Yeah. Well, it's like, okay, so the 3% fee covers like the network fee. So you pay like Visa, for example, for like processing the transaction. And then it also covers like whatever rewards you're about to give. Like there's basically 3 ways you can make monies from credit cards. One is the annual fee. One is on the interchange fees, which is like 3% you're charging. And then the third way is through revolvers, which are people who hold balance on a credit card. And by managing all of these 3 things, you become profitable on a credit card. And so they were like, okay, we can just get rid of the interchange fee, have no annual fee, and then somehow just make enough money from revolvers, which just didn't happen. But
that's what Wells Fargo said. Yeah.
So that's like how they started. And then they also expanded into like a rewards marketplace, which is like really what they're doubling down into. And they are like really pushing this idea that they're like a loyalty player that's like bringing communities together. I feel like anyone that talks about Bilt, like they honestly don't even talk about the rent anymore. Like the thing they talk about is this platform and how they're building like small businesses up and they're helping like people become more in touch with their community. And then the third biggest part is like the property management partnerships that they've been able to do. Because I actually think like rent probably makes up a pretty small amount of like what they're putting their efforts towards. And I think like what got them the valuation that they have today. I think it's like more on the property management and like loyalty side.
Given all this, I think Bilt wouldn't get my check. I don't know
if
do you guys have like different claims? I feel like we might be on different sides.
Yeah, I feel like I'm pretty bullish on them. I feel like they announced a lot in the email that Ankur sent out. So just to like quickly go over the things that we found out from this email that he sent to cardholders, and what basically announced their launch was that the Wells Fargo is ending their partnership, like we alluded to. They're moving into the mortgage market, which we're going to get more into. But they're basically partnering with United Wholesale Mortgage First, which is like the #1 lender in the United States. And they contributed $100 million to the round. And then they're expanding into other housing categories, so like condos and HOA. I've actually been looking at houses recently, and like the HOA fees are out of control. Like in SF, they're like $1,500 a month, which is crazy. So like the ability to even get points on that is like huge. They're also doing student housing. They partnered with like a student housing company, and they're starting at Baylor. And then they're also releasing the Bilt Card 2.0, which is basically just creating like 3 different layers. So we can get into all those things, but those were basically like all the announcements that they made.
I mean, this makes sense of them trying to go into more areas of spend. I feel like that's how they scale their business, because rent is such a small portion of like the entire housing spend in the world, right? They're at 10% penetration of the rent market after what, like 5 years. Like I could see them even like once they move into mortgages, I could see that being a play. And the thing that I was like curious about the mortgages is like, what's the difference between missing a mortgage payment versus missing a credit card payment? And I think after like 3 months of missing mortgage payments, technically they have the right to foreclose your house, versus like missing a credit card payment for like 90 days or 120 days. They just like close your credit card bill, and then you're like, then you have to go like pay that bill or whatever. And it like obviously hurts your credit score, but you're not at risk of you losing your house. I'm actually just so curious how they like go after the problem of like keeping the same experience of like missing your like mortgage/rent payment with is like with missing your credit card payments. But
like they still have to report to like United Wholesale Mortgage or whoever the mortgage player is, right? Because like even if you're paying it on the credit card,
like it's still the same risk.
Well, yeah, because like the actual loan and like mortgage you're taking out is still coming from like some mortgage lender. And so I'm sure that like the mortgage lender can still foreclose on your house in like 3 months, even if it's going through like a credit card payment. Also, like the other thing I saw was that like one of the, I guess this is like a prediction, but it's that you actually can do it through direct ACH in the future. And that's like something that like people think that they probably will start allowing. I guess like other players do this today. So there's like Mesa and Rocket. Mesa gives you 1 point for every dollar that you spend on mortgage, up to like $100,000 annually. And then this can be used for like gift cards, travel, mortgage payments, other things like that. But then it's also like, I guess we're not in the space, so maybe we just haven't heard about it, but I haven't heard of them being like a big player. And I feel like Bilt already has the young demographic of people that will go on to buy houses, which is like the assumption that like Wells Fargo was making, but then it's like people weren't going to Wells Fargo to get these mortgages. But I think that they would stay within the Bilt ecosystem, so I don't think that's like inherently wrong.
Yeah, Wells Fargo got like really screwed because they're literally like exiting the deal as Bilt pushes into mortgages, which is like the thing they were banking on making them money. I genuinely feel like Wells Fargo is like one of those companies that has a talent for like making the wrong decision. My dad like worked there for like, well, I think he still kind of works there. So
I actually think they were in the right for like leaving the partnership, even if there was a world in which they like renegotiate the contract, because like the contract with Cardless that they have is that they're going to share both the costs and revenue instead of one party absorbing all the like revenue and costs, because clearly like the incentives were aligned because Bilt could do whatever they want and then Wells Fargo would just have to like pay the cost on their end. So specifically like Wells Fargo was reportedly losing up to $10 million per month, and this was just because people were not revolving on their balances as much as they thought they would. They were banking on the fact that their 3% fee that they were going to make on non-rent expenses would also help cover the reward structure that they had.
And like that fee wouldn't be getting eaten into the way the rent fee is.
Yeah. So it's like, it's basically just like this huge balancing act. The hardest part about launching a credit card is like getting the amount of users to make the whole equation basically work, where it's like how many users are going to revolve and make you interest, how many users are going to pay your annual fee, and then how many users are actually going to utilize the rewards that you give them. Like a 1% rewards on a 0% originating or 0% fee card makes no sense in my mind. Like paying your customers 1% for all of their rent spend and then charging the merchant or like the landlord 0%. Like you have so little margin to play with.
Yeah, I think it is like a margin issue, right? Because if like the average person's paying like $1,000 in rent, Bilt is giving them back $16 to $20 in rewards right now.
Yeah.
But then I guess like the fee kind of solves for that.
Yeah. So the partnership with Cardless, in my opinion, the only benefit they're getting is like legally they're allowed to have a credit card, because Cardless is like a fintech. Like in order to operate a credit card, you have to like partner with a bank.
I think they did like Robinhood's too. Like I think they like it's kind of like a white label.
Yeah. It's basic,
like a white label credit card.
And so Bilt is now going to have to like run the entire underwriting model, do the unit economics, maintain profitability, which they're just not going to do, which is also why we're seeing them restructure the cards. They're going to have a free card and then 2 premium cards. So one, they're going to definitely decrease the benefits for all their consumers, which is going to cause churn. Like, people are not going to spend as much. And so I don't think they have the team to actually make this work, because they've never made this work in the past.
Partners with a bank. So like Cardless partners with a bank, and then the bank does like the underwriting, right?
I think Bilt can do the underwriting too. It doesn't matter who does the underwriting.
Oh, okay. Because like I think in all the other scenarios with Cardless, like they partner with a bank. So like they partnered with like First Electronic Bank to do all of the things I think you're talking about.
A lot of the partnerships are there for regulatory approval, if that makes sense.
Like they just like need someone to call themselves the bank.
Yeah. But they don't, and then the bank just charges you a fee to operate.
But then you do everything.
And so I'm pretty sure, like, because Bilt is going to, if Bilt is going to get both the revenue and the losses, they're going to operate the underwriting model. They're going to want to be in charge of that. But they don't have the team that's done that before.
Yeah.
Because like they've not needed to, because Wells Fargo has always taken all of the hit.
Yeah. I think part of like Bilt winning in this scenario also is like that they get more flexibility on who they underwrite versus Wells Fargo picking 2.
Exactly. So I think it's like possible. I think it's going to be very hard. Like, they have to make the math equation work, which like no one's been able to make it work in the future. I think the reason why they're getting this valuation, because by the way, they raised it a 10x multiple, which is also unheard of in fintech. Normally you're closer to 7x. So they're definitely on the higher end. I think it's just like the times, like, how do you explain it? Like right now, because AI is like so big and they're not being pressured to be profitable, it's kind of like everyone's not being pressured to be profitable. Bilt has 2 to 3 years and not worry about it, to like play with this and like not really worry about being profitable and get to like profitability. But back in 2022, like when all the eyes were on, like, for example, the BNPL companies like Affirm, Klarna, and they were like super in the negative, like their stocks tanked.
The margins do look tough. I think they'll do well just because I feel like they've gotten a good amount of market share, and I think there's a lot of directions you can go with that. And I feel like they'll probably crack a good amount of the mortgage market as well. And I think like once you have market share, this is just like the whole VC model, but I think there are ways to like make things more profitable over time, like we're already seeing with their annual fees. But I haven't like sat down to actually do the math / I couldn't if I tried.
Also for the mortgages, like supposedly they're gonna be just like incorporated into every existing mortgage that they already have, which like I don't know what that amounts to, but it's like if you automatically just get looped into like the Bilt ecosystem, it's not even like you have a choice. Like even for all the people that are on the Bilt ecosystem because their apartments partnered with them, like you're giving them business even though you never signed up for the card or anything like that. And so it's like very similar with the mortgages too, where they said they're starting with this lender, but they're going to expand into like more mortgage lenders. And so if they're just able to like penetrate that market, regardless of what like the people that are getting the mortgages want, like they'll do well.
Anyways, to conclude, people were wondering if Bilt would make it out. And as we told you from day one, they would.
They did. They did. And, you know,
people actually did not think like anyone would sign with them after Wells.
Yeah, that's true.
Congratulations to them, even though I just shat on them for a couple minutes.
Shout out Encore. I just want a wedding like yours one day.
Priya and I did not shit on Bilt.
Yeah.
So if you want to give us a brand deal, we're happy to cut Maya out of the revenue from it.